Most people think life insurance companies are all the same. Same products, same promises, just different illustrations with executives who only care about you paying your premium on time. But what if I told you that this completely misses what separates the companies that last from the ones that don't? In this candid conversation, I'm sitting down with a One America president, Dennis Martin, who oversees all the company's life insurance and long-term care products. He's someone who started as an actuary, built his career on math, and now oversees billions in life insurance and long-term care. Which is why I asked him directly, why should someone choose One America over other mutual companies? Why don't they publish their dividend rate when everyone else does? And in a world chasing the highest illustrations, why are they willing to be more conservative than other companies? But then the conversation took a turn, because behind all the products, strategies, and numbers, there's a personal story that changed how he sees and treats this entire industry. So we're gonna unpack what makes One America different, what most people misunderstand about whole life insurance, and why long-term care might be the biggest risk no one's planning for. Let's dive in. Dennis Martin, it's an honor to have you on the BetterWealth show.
Caleb, I really appreciate the invitation, truly.
You represent One America, and you'll get into what you do for One America because you're one of the big dogs there. And so I'm definitely curious and want to learn more about that. But
absolutely,
life insurance is very personal to you. You spoke at my event, I think it was 2 years ago?
I think that sounds right.
Two or three years ago.
2 or 3 years ago, yeah.
And you have it's very personal to you. And I think it would be a really good way to open up of like, why is life insurance so personal to you as a human?
Yeah. So I'll give you let's try to give you the short version of the story, Caleb. But I got into this business simply because I was good at math, and and many who've heard my story know that I started as an actuary in this business, and mostly because it was easy for me and it paid well. And the event that really started to transform my thinking was when my mom passed away when I was 25, and it was very sudden. And in literally the time frame of a week, I went from being a pricing actuary and doing the math and being detached from the outcomes that we're creating for people to filing a claim form with my mom's name on the top. And that was impactful. And even in the moment, it wasn't a situation where we had no money and we were going to be we would have figured it out, I guess. At the same time, having that, knowing that, and feeling that moment that all the things you had to take care of right then and there, you had the money for. And I didn't think about what that was going to be or talk to my dad about how it was going to be. We could just grieve and be together knowing that was there. So, and that was really powerful for me at the time. And I maybe had one more thing, and I'm going to speak about that here this week at this event we're at. In 1997, I had a chance to move from a corporate type actuarial job to work with the field in field facing, doing advanced sales and illustrations. And right away, you started to really feel the power of what it is we do, but really what it is that our advisors and producers do together with the clients to help them put these plans in place. And so during that time, I was 25 in 1995. Those 2 years were really formative for me in shaping where I was going in this industry, but also what I believed and what I thought was important.
Yeah. So, have you always been an outgoing actuary? Because normally actuaries make CPAs look extroverted.
Yeah.
And I'm just curious, like you're always good with people. You're going to be speaking on stage, which is usually a actuary's nightmare.
Yeah. So it's very interesting. So I was a really shy person as a young man. So I always was social. I wanted to connect with people and be around people, but I was really quite shy in this public speaking context. And I found that, in fact, I'll talk about today again, my very first time speaking to a room of this size. I was 27 and I was terrified, no training. And, but I've always found that need to connect and desire to connect. And so I think extroverted is always part of how I've been, but learning to be confident in who I am and what I can bring. And, my word this year is courage. Having that courage to put it out there to people. I've been this 35 years now, and I still feel like I'm finding courage, every day to go farther and share more and declare more, right? In that aspect. So, I wasn't outgoing as a young man. I got confidence in maybe my ability and how well I knew the math. And I built on that over time as I interacted with so many people in the field and having impact in our business. I learned to feel that. So, I think I never really lose the stage fright completely, right? But you just learn to be comfortable and confident in it and share your story.
What's your title at One America, and what do you do day in and day out, just as you
Right.
represent One America?
Yeah. So my title is President of Individual Life and Financial Services, which is our life insurance and long-term care business. And then I also oversee our institutional markets business, which is where we do a lot of what we call pension risk transfer business, where we can bring our expertise in risk management and investments into that space, and it's an accretive business for us to earn. So I oversee those businesses. What do I do? In some ways, I try to do the least amount possible.
Right.
Right, when leading and doing are different things, and part of my growth journey over the last 5 years is maybe a little bit more has been learning to let go of the things that got me here and really develop and grow myself in the things that are really important to lead people and try to focus on outcomes rather than doing. So that's been a transition for me over the last
Yep.
5 years. I've been really focused on. So
But you're overseeing all the production of life insurance and long-term care.
correct. Yes. Yeah.
Now there's a lot of amazing life insurance companies. One America is one of
Yeah.
them. How would you describe One America's advantage? And like, what do you guys do really well? What do you like? Because obviously, no insurance company is going to check all the boxes for every
Right.
age group with every product. So, out of One America, like, what's talk to me about the One America story?
Right.
I know you guys are mutual, and I believe majority of people that watch this show or listen to our podcast understand the benefits of mutuality.
Right.
So you can talk about that, but once you get into that,
Right.
not all mutuals are created equal,
Right.
and not every product's created equal.
Right. So maybe I'll first talk about mutuality and
Yeah.
how I think about it and how we
Yeah,
think
I would love
about
that.
it. And I think it's probably true for all carriers, but certainly from my perspective. And I think you're right. I think I know a lot of your listeners and what there'd be there. But
Mhm.
for me, I always think of mutuality like if you're familiar with Simon Sinek, he has this infinite game analogy,
Yep.
and he has a book out now. And the whole idea is you play to keep playing, and it's focused on long-term value and performance, not against short-term price and return, right? At the macro level. And in the life insurance business, I think that's really, really important. I think I mentioned earlier, 35 years in the business, we've seen the products that come and go and the companies that come and go. And that sometimes you lose sight of the principles that endure and the things that really drive long-term value. And, as an actuary, when you're young, people ask you, what do you do? And it's hard to describe.
Yeah.
Right.
I calculate when people are going to die on large numbers.
Yeah. Right. And
it's a conversation stopper.
it does. No one wants to talk about that. But I would just offer that I actually think the job of the profession is to build
Yeah.
financial systems that can't fail. And so if you know the old four pillars of the financial services industry, the insurance one is the one that stood strongest through thick and thin. And I would suggest that actuaries are really the core, and actuarial systems and design is why that survived. And the biggest piece of that from the very beginning has been whole life insurance. It's built to not fail. And so that's the number one job, right? Are you going to be here? Are you going to keep playing? And you focus on long-term value and performance. So that's at the core of, I think, a lot of mutuals, and certainly for us, and how we think about the products that we sell and how we go about bringing them to market. So we want to make sure they stand the test of time, that they do what they say they're going to do. And at the same time, are we really driving performance for the long term, making sure that the risks we take on the investment side and the pricing side are appropriate?
Right.
And you can always say there's always assumptions you can make. But I always say, be careful how many assumptions you make, because the more assumptions you make, the more things that can go wrong. right?
Totally.
And, I think that's one of the value points. So for One America, though, like we have a conversation around what we call the relationship strategy. And so, this business, you and I have known each other for a while.
Yep.
You like me, I like you.
Totally.
And historically, that was enough to do business, right? And we had this personal nature of it. And as we've kind of progressed, especially in the past 10 years, I would say, it's no longer been enough just to align yourself with people with the same values and believe in what you do. There's so many other aspects to it. So certainly, so we kind of have a few tenets that I think we have 4. I'll try to get them exactly how we do them. But the first part is just simply who we are.
Yeah.
The mutual, that kind of value.
How many years have you guys been mutual?
Since the beginning, 1877.
Wow.
And so, and that'll be long after
Yes.
I'm here.
It's going to
is the
outlive
intent,
everyone.
right?
Yeah.
And so that's a big part of it. And that isn't necessarily unique to One America, but that's a core underpinning, and it's a core for mutual companies. We also then have this, we call making the professional personal. And so that's how do we personally connect? Do we really kind of have this feeling of, yeah, we're here for business, but we're also here because we're aligned and it makes sense. And I think there's two aspects to that. Getting the personal down, that's important, but it's not always the hardest part. Sometimes it's the professional. Are you really showing up professionally day to day? Are all of our transactions taking place? So you and I interact great, but our teams will have numerous interactions every day that you and I won't even be part of. And it's really important that those are going well at the same time. And so we have another focus on service and experience and making sure that we have strong and resilient service and predictable and reliable service. So you know what to expect when you come to do business with us. And we always want it to be easier and go faster, as do you.
Yeah.
But the most important thing is stable, consistent, reliable,
That's right.
and improvement over time.
Yeah.
And in particular with service, we're focusing on what I would call moments of truth. So like everybody, we're trying to look at ways to automate and use technology to streamline and simplify. But at key moments of truth, we want to make sure we don't lose the human element of service and the impact. So obviously in a day-to-day context, a lot of times that's in new business and underwriting, interacting with you or your advisors. That's really important because that's where nothing happens until a sale is made, right? So we want to do really well there. But with your clients, after we sell them, very often they want to be on their own. So we're continuing to invest in the ability to do self-service for clients, but also making sure we can be there and be personal when it is really important. And the best example of that I would offer is our claims process, our long-term care claims process, where we have fully in-house, we're fully committed to keeping it in-house, and we'll look for ways to streamline and automate and use services where it makes sense, but making sure that first client interaction and all the way through that process, they have someone who really understands, we call it empathetic curiosity, because we have to understand where they're coming from and be curious about, is it really a claim and how does it work? And making sure we really follow the terms of the contract to keep the integrity of the pricing and the financial stability, but also really thinking about the people who are impacted by what we do. So, so service is important. And I always say at the end of the day, we want to automate and do things better, but we also, if we don't get it right, we're going to make it right.
Yes.
And that's kind of part of who we are.
I can attest to that. You guys have an incredible team, and I've enjoyed my interactions, but then also you can back up just that and just we don't have to name names, but not every company can check all those boxes. Just put it that
I really
way.
appreciate you saying that, Caleb. It's something that our team has really worked hard. It hasn't always been that way, but we've had a really strong and resilient service capability for 3 or 4 years now. And I know it because they never call me.
Right.
And that's why I know things are going well. And maybe the last thing I'd like to offer, because it's important, the other tenet of our relationship strategy is bringing intellectual value to you and folks like you. And simply put, we want to help you grow. And we have a strong belief that distribution is core to the value proposition of the insurance industry, really in front of carriers, right? You're the one who's client facing, making the market, so to speak. And so if we can help you grow, we grow. And that's just how we think about the business.
Yep. So when it comes to, I want to talk about long-term care in a second, because I think that's something super unique to OneAmerica when it comes to mutual life insurance. And I want everyone to leave this episode understanding actually how that works. But let's talk about whole life.
Sure.
It's a competitive landscape. You guys don't publish your dividends. I want to hear why you do that. And then in a world where there's some companies that illustrate maybe better than you. What's the story there? Because you guys have been really consistent. I appreciate that consistency around saying hey, we're not playing the year-to-year illustration game. We're here for the long run, and I don't want to put words in your mouth, but it's we are going to design things where we won't ever have to apologize in the future. And we care way more about stability than winning on the most sexy illustration. Those are my words, not yours. But talk to me about in when we're looking at whole life and some of the competitive products out there and how you illustrate. I want to hear in your own words that, and then also maybe why you don't publish dividends and any other things that you hear from people and that you take day to day. I would love to just hear you share that publicly.
So there can be a lot in there. And what I would say first is I think all companies are trying to drive long-term performance and value. And certainly we understand competition is a real thing. And we are very focused on making sure that we do what we say we're going to do and can follow that and make sure we have, stability over illustration is important. I think everybody would kind of say the same thing, right? So I know that makes us or me unique. But I think that I'll speak for myself, not for my competitors. We are always focused on improving fundamentals, driving performance over the long term. I'm a measure twice, cut once. So
That's the
as you look,
actuary in you,
it
right?
is right. Like, as you look at how you can drive performance using alternative investments or things like that, those are things we explore. I think we are probably a little bit behind the curve, maybe, or maybe slower than others. I don't want to say behind the curve because
Yeah.
you never know where the curve is going.
Right.
Right. So I think those are things that we hear that a big part of what we also focus on is flexibility in our product designs.
Yeah.
And make no mistake, we are working to continue to drive performance over the long term.
Yeah.
And when I think about whole life insurance and the holding period, we're all going to live in the same economy. We're all going to buy the same bonds. We're all going to experience the same ups and downs over the long term. And so short-termism is not something you want to think about. And I think we're really focused on driving performance for the long term,
Yeah.
and not necessarily in a comparative way. And maybe I'll use that to go into the dividend rate conversation.
Yeah.
So we've never published the dividend rate. Each company has a somewhat unique way of calculating their dividend
It's
rate.
kind of a joke,
Right?
Because a gross dividend doesn't relate to internal rate of return. You guys do. You can look at your internal rate of return, but it's everyone. There's not one gold standard on how people use dividends.
So there's no dividend interest rate in the contract. It's not even a term that's mentioned in the policy, I don't think, in most cases, but there is a dividend mentioned as payable. It's really a conversation. And so for us, we've never published it. And so our method to doing so is a very pure, here's our gross investment yield, here's how we apply it. And it's not like we couldn't decide, well, this is the rate we would publish. Well, what would I do for history? We haven't tracked it all the way through. So once you start something, you have to keep publishing it. And I don't want to contrive something that looks better that could be misused. Like, since it has no contractual relevance, no client can say, here's my dividend rate I got on my policy because it's transformed to something else. It has the potential for misuse as much as it does proper use. And so for us, it's simply a place we stay away from. Practically speaking, right now we have we can answer a set of questions when we get this question, and we have performance over time. We do talk about how we change our scale and provide information that we think is comparative without being nominal.
Yeah.
And if we decide to publish something, we'll just trade one set of questions for a different set of questions, both of which we'll be talking around. It doesn't really mean anything anyway.
Yes.
And at the end of the day, the guarantees are the foundation. We tend to focus on strong guarantees in our designs.
Yes.
And they want to drive performance. So, that's how I would respond to it. But I think it's something we're very focused on, driving our own fundamentals, making sure we're not chasing someone else's, to make sure we can deliver on what we're going to do and continue to drive performance within the company and for our policyholders over time.
In whole life, you guys have an index option on your dividends.
Yeah.
How has that worked, and has that been popular? Because in other words, you have a whole life chassis, which is really, really powerful, and you have a dividend option, which very few companies have, that says, I can take the pure dividend, and you can see like what that potentially could be from a projection, or I could take what I was going to get in the dividend and put it into an index option, potentially get higher, but it could be lower.
Sure.
How many people is that a popular thing that people use, and like has that been successful?
Yeah. So I'm really glad you asked that question. So number one, I think it's not as popular as I maybe feel like it could be or should be. I don't want to say it could be. And here's why I would say that. A lot of folks who sell whole life are very pure in what it is, right? And so, as you know, the word indexed has
a lot
many
of
connotations today. And I think most of those are a result of how it's illustrated, not necessarily that the fact is it's a design flaw. It's more how it's presented and the sort of product proliferation that goes along with it in the marketplace, which is kind of outside the whole life space. And so it has this like starting point where it's negative. And to be clear, the way that the option works is your guaranteed cash value always goes up. So things we hear about in rooms like this today, guaranteed cash value goes up, and you have your dividend. You can choose to use that and expose that to market upside if you choose. But you don't lose your guarantees. There's no charge for it if you don't use it. You simply trade a fixed dividend payment for the option to have more if the market pays off. So how has it worked out? I can tell you personally that I use this option in my own policies.
Okay.
And I can tell you in the last 3 years, my dividends have doubled all 3 of those years. So that's a pretty good start.
Yeah.
And obviously over time, the illustration we follow all the look back rules. We're very conservative in that. But it does provide upside over time
on a whole life chassis.
On a whole life
So
chassis.
you're limiting your downside
Right.
by just having it properly in a whole life chassis with a solid company, with a very conservative company. But you're giving the ability to have upside if someone wanted that on a whole life chassis.
And I think our illustration factor is like a 1.17 increase in our dividend scale now to give you a sense of what the potential upside is. And really, I would maybe explain that in general terms of, if you believe in the market risk premium generally in the economy, then over time the market will slightly outperform.
Yeah.
And so it's not a dramatic increase, but it's some upside. And in the place where basis points count, I personally have benefited and see the upside potential. And given the foundation of guarantees I have already on the base contracts and the guaranteed cash values, I'm more than comfortable using that personally. And so that's where I say I think it should be used more, because I like it. It fits inside my utility and my preferences, but it's not for everybody. So
it's really interesting because OneAmerica is one of the most conservative companies, and you guys give someone the option. So if someone came to you and said, hey, I like OneAmerica across the board, but this company might outperform on a dividend IRR.
Right.
Well, one thing that you have in your back pocket is you're like, okay, if we want to play that game, well, we have an indexing option over here, and that might not be right for everyone, but it gives people optionality, gives people the potential over time to get that upside. And again, for those of you that aren't as familiar with how Index Universal Life, this is totally different from just how the chassis is built, how the underwriting's done. And so it's very unique, and props to you guys for doing it, sticking to your guns on that.
Well, I'll think of it as icing on the cake in a way. And I think it is an opportunity. And it's one of these things where it's an illustration, but it's something I don't really control it. It's just simply if the market performs the way the market performs, it's an upside you have. And that's something we can offer that no one else does.
Right.
In addition to our dividend rates and all those other things that are part of what we deliver, this is simply an upside option that's in the market for you to choose or not choose. So in a way, it's a choice we can offer, no one else does. In separate and distinct from all the other fundamentals of the product.
We've helped people unlock millions of dollars in hidden value just by reviewing their old life insurance policies. Unfortunately, thousands of people do not have life insurance policies set up properly, which could be costing them a lot of money. If you have a policy, the few minutes it takes to fill out our form could be the difference between continuing to waste money or unlocking serious value. If you qualify, we'll review your policy 100% for free and give you the honest breakdown you deserve. Click the link in the description or take comment below to apply. Back to the video. Before we talk about long-term care, because I know that's where you will very much separate yourself.
Sure.
In the whole life space, where does OneAmerica stand out from everybody else?
So I think I think for me, what I see, breadth of offering. We try to have a full offering across all the pay scales and flexibility inside the products. How you can arrange the death benefit and premium payment options, PUAR flexibility to really kind of get you to the maximum tax efficiency, if that's what you will. That's how I design my policies. We have a rider called the EBIR, which is sort of
you're pro overfunding or max funding whole life.
I am, sure. Yeah. It's a great opportunity in the savings and tax efficiency side to do that. So I am. I know what I do. Right?
Yes.
And that's what I do.
And you guys also have 30-year convertible term options, right?
We do, yeah. We have, I think we have 10, 15, 20, and 30 convertible terms.
Yeah.
So,
and not every mutual company actually goes up to 30. Right. A lot of them go to 20.
Yeah.
Okay, so anything else you want to mention about the whole life before we go into long-term care?
No, nothing comes to mind yet.
So long-term care is not a very sexy conversation, but it's very important, and it's going to become more and more important out there. And more companies are getting out of it versus getting in. So first of all, I know long-term care is also personal to you.
Right.
So if you could break down like what is long-term care, why should there's two types of people watching this. There's people that are advisors or insurance agents. They need to understand this. But then there's also a lot of consumers. There's a lot of people that are watching this because they want to be the most efficient with their money.
Right.
And sometimes it's easy to look at like utility and rate of return, but long-term care might not juice your returns, but it potentially could be the thing that juices your returns the most depending on what happens in your life.
Right.
So with that, please give kind of how do you explain long-term care? Why is it personal to you? And then what's unique about One America, because a lot of times long-term care is designed with like you use it or you lose it.
Right.
And you guys have designed in such a way where you get the benefits of long-term care, but if you don't use it, and hopefully nobody uses it, even though statistics will say there will be people that use it, it's not like all the money that you paid in goes and evaporates.
Right. There's a lot there.
I
So
know.
I'll try
I'm setting the stage.
Yeah. So first, long-term care, it's an insurance product that you get. Everyone's going to need long-term care at some point in some form in their life. And, there's a standard contractual definition, the 206 ADLs or inability to perform certain activities or mild or severe cognitive impairment. Those are I might have got all those right, but those are how you diagnose these claims. And we're all kind of headed there.
Yeah.
Right. And so it's personal for me because I've watched my grandma had a 12-year long-term care claim. I watched my dad take care of her and my aunt take care of her for those 12 years. Having some personal experience with it right now, watching my wife's family and her dad. And that's really what triggers everybody, right? It's kind of always been this thing in the future. Now it's like this thing that's right in front of us. Unfortunately, the long-term care, standalone long-term care world, a lot of factors in this. Basically, the upshot is they underprice it for too long. And now the carriers really lost a lot of money. And then to price it, not so much on the claim side, but on long-term pricing assumptions like investment returns and lapse rates.
Interesting.
And so they assumed higher interest rates would be available on the money that was coming in. They weren't. They assumed people wouldn't keep them to the degree that they have. And so both those things have resulted in much higher liabilities. And the claims experience has actually been not that far out of line with where the actuaries might have said 25 years ago, right? Certainly there's been some change, but that's not the thing that's really driven that. So unfortunately, that's led to an environment where there's no supply for the advisor, and the experience of the long-term care insurance is all negative. So they don't talk about something that everyone really needs is probably on their mind, and they don't know that there's a solution. And that's really where One America has had an advantage, or an advantage has emerged. So I started One America in 2009, and one of the draws was having asset-based long-term care, having our asset care product. And that product is distinct from standalone long-term care in that it's based on, as the word name would imply, an underlying asset. So you have a life insurance policy, and then you have a long-term care on top of that. And really the function of the life insurance policy, or it could be an annuity, is to have a savings component first that the client contributes for the initial needs for long-term care. Think of it like a healthcare deductible. So if everyone needs 1 or 2 years of care, then you should save for that. Like things that everyone needs aren't really insurable. What's insurable is things that happen to you beyond the norm, beyond the mean, right? That's what you want to insure because you can't save for those things. And nor should society expect you to, right? It's not possible. Mm-hmm. So hybrid products have brought together in an actuarial context, the best of both worlds. You save for what you need to, and I'll protect the extremes which you really can't afford to save and don't want to save because it would preclude you from living other aspects of your life the way you want.
Yes.
Because you can't save enough for all the risk. So you decide how much you should save for, and then you figure out how to transfer the rest.
Yes.
And I think that's important because I'm sure you talk about that context with your whole life clients all the time in the context of spendable money. How do you spend your money? How do you have the most income? Long-term care is kind of the same because what you want is when that need shows up, do you have income to cover it? Mm-hmm. And you may have enough income. You don't want to expose your assets necessarily because it's kind of this unpredictable amount. Mm-hmm. But if you have something that turns on when you need it, then that's perfect, right? Yeah. That's the beauty of insurance all the time, right? It pays when you need it, even though you don't know when that is. Right. And so that's kind of the power of it. So I think clients should, the first thing is to make sure you have the income you need in retirement to live the way you want and have the plan in place to give you the permission to spend, as Tom would say, and willingness to spend, and you're comfortable that you know what you're doing. And long-term care is just the next thing because income is first. Then the health event is number 2, usually in people's mindset. So it's extending the thinking is really how I would look at it.
It's creating more efficiency in a plan because if your plan only works if you're healthy, then you're one bad health event away from everything collapsing. Right. So the problem with long-term care is people are getting sick, and sometimes people are living a long time sick, and it can be very expensive. Right. I mean, we're talking $6,000, $10,000, $15,000, maybe $20,000 a month. Yeah. So long-term care in another way ensures that, so that if you check the boxes of needing that, an insurance policy will be able to pay for those needs. Yes, okay. Am I tracking so far? Okay. Now there's a traditional policy, and the traditional policy says, I am going to pay into something, and it's very similar to car insurance or home insurance. If I go on claim, then I great, but it's almost like term insurance in such a way you're continuing to pay, and you may or may not need it. And the pros with that is it's probably cheaper. But then the con to that is some insurance companies you're paying into something that they may not even be able to say yes to in the future. That would be, I can't imagine paying in 10, 15, 20 years and then have the company go under. That's a whole nother thing that we could talk about. But so you have that. And then hybrid is saying, listen, we're gonna give you the benefits of life and of long-term care, but we're gonna build in a life insurance or an annuity chassis. Meaning you're gonna put money into something that, let's say you don't need long-term care and it's in a life insurance, you're gonna die and that life insurance policy is gonna pay income tax free. Or if it's into an annuity, that annuity can get passed on, or you could probably spend it while you're alive. Why isn't everyone doing the hybrid model? Because I bet the hybrid model needs a little bit more money. But you're not, it's not a use it or lose it kind of deal. Like you're almost embedding it into financial products that are already being used and valuable.
So I think, so maybe I want to say something up front. Like, I think the standalone LTC, it will be the most efficient insurance cost. It'll be the lowest cost.
It's like term insurance.
Like term insurance. And look, it's the kind of thing you spend but hope you never need. That's what really insurance is. Like, you hope you never need it. If you do, you're glad you did. You hope you bought good stuff, right? Not everyone does that, but that's what you hope. First of all, I think that the way companies are doing it today is much more robust than in the past. So I think that's one thing I want advisors to know and policyholders to know. Companies have learned from the mistakes. And so even the standalone side, you should have a greater confidence in what's happening now. It's much more expensive now than it used to be, as it always should have been. But nevertheless, I like to qualify that because I want people to have more insurance in force, regardless of what type it is. So don't be fearful of. It's more a description of what type do I want, what fits for me and my personal utility and my planning concept. So why wouldn't you go there? Is because it'll cost you less to cover the risk with this. Why you might go there as well. I'm kind of hedging whether I feel like I need it or not. And by the way, everyone has their own view of whether they feel like they need it or not, based on their own experience, their longevity, their parents. Like, we all have our own impression of our health, regardless of whether it's right or not. And so they may say, look, I'll pay a little bit more. And then if I don't need it, I'll get this back. That feels better. So, I'll talk about this a bit today, Caleb. People don't do math. People know feeling. They rely on you for the math, but you just show them the options and say, how does that feel? And these products are not cheap, and nor is standalone long-term care. This isn't often a question of affordability. It's a question of preference, right? And do I want to buy something better that gives me more options and more flexibility on outcomes and covers the risk no matter what? Or do I want to buy the cheapest thing and I'm happy without leaving my portfolio? Can you
explain how the products actually work, the annuity and the life insurance product with the long-term care built in?
Oh, sure. So like on a life insurance chassis, it's probably the easiest. They're kind of the same. I'll just use the one. So you'll buy ours is a whole life chassis. You might be a $200,000 death benefit, for example, and then you'll buy what we call extension of benefits rider on top of that. So the way it works is you buy those two things together. They cost a little bit more than the life insurance, obviously in total, because you get acceleration and you get the COB on top of that. So, but it's cheaper than buying life and long-term care together, right? So you get an efficiency over buying both. And then if you incur a long-term care claim and are eligible, the first 24 months are paid from that base policy. So let's actually say it was $240,000 a month, just for ease of math. Then you'd be $10,000 a month for 24 months. And if you were to, if you use all of that before you die, then there'd be no more additional death benefit when you die. But if you still needed coverage, we would keep paying that $10,000 a month, in our case, up to lifetime, because we offer lifetime benefits. I think the only carrier that still does that. Now, if you didn't need it at all, we would pay the $240,000 and you wouldn't realize anything from the continuation of benefits, which mean that premium doesn't come back to you. But because you're covering the tail risk with that, it's much less than you would have paid for standalone, because you're only covering the tail risk and you're self-funding in a sense, this first part, by buying protection. So you're not really self-funding, but you are using your own money, right?
You still get the lifetime benefit of long-term care. But if you don't have to use it, which would be amazing, the death benefit
Right.
gets paid. So you're technically not realizing the savings, but your estate is.
You don't always get all your money back in every case, but you often you get a larger portion of it if you don't need it at all. And that's just, how do people feel about that?
Yeah, that's great. Yeah. And then the annuity is the same concept, but it's just with an annuity versus life insurance.
If you qualify for the life, it's probably much better efficiency wise. The reason you buy an annuity is if you had one already sitting that you want to use, or you didn't qualify for the death benefit, in which case you could, it creates more options.
When I think of One America, I think of great customer service, great mutual company, great products. And what makes you guys so unique is not only do you have the index option, but you have long-term care hybrid products that from a planning standpoint needs to be talked about more, especially when we talk about, coming down the mountain, retirement planning, all these things. We need to have a conversation about long-term care, and not everyone's having that. Now, I've said this, and many other people talk about living benefits of life insurance. And I know that even on your typical whole life insurance, you have critical illness riders.
Right.
Talk to me about the difference between those riders and a traditional long-term care rider, because there's some overlap, but it's not a pure long-term care.
Yeah, I think so. There could be a lot of variations, and so I don't want to probably try to pick them all apart. Is just too elaborate
in generality.
I think one of the things I would say, number one, if it's just a chronic illness rider, like usually it's adjusting the base death benefit, and a lot of times it's kind of an add-on. Companies, they throw it in, it's included, there's no additional charge.
Yep.
And to be somewhat cynical, you always get what you pay for, right? So if they don't charge you for it, what's it really worth? And you're just going to trade dollars there. And I think it's important to understand the underlying mechanics of those. There's different ways companies will administer those in terms of how it affects future death benefits.
A lot of times they can spend down your death benefit more than just a dollar for dollar. If you trigger one of these things when you're young, you can tap into your death benefit early, but sometimes it's $2 for every dollar you're getting. And so you have to decide, is it worth doing that?
One of the things I would say there is make sure you understand it. Like, don't just, I have that too. It's not a checkbox in the planning context. So make sure that, I'm sort of like, I like to use a Swiss Army knife analogy sometimes,
great analogy. Yeah.
Where this can do this and this and this and this. It can do all these things. But if you need a screwdriver, you never go get your Swiss Army knife. You go get a screwdriver.
Mm-hmm.
If you need a pair of scissors, you never get your Swiss Army knife. You get a pair of scissors. So if you buy life insurance and it's for a purpose and it's for what you can use, it's for wherever you're structuring in your plan. If you say, well, that covers my long-term care too. Well, just slow down.
Yeah.
Does it really? And understand the mechanics of how this works if that plays out. Number one, it doesn't always pay as much as you might think.
Mm-hmm.
The daily administration rules, the daily limits, all those things are really important because a lot of this is just like life insurance, limited by tax code, like how much you can accelerate the daily amount. So just make sure you know how it works. Right. And don't just check the box, say me too, because you haven't spent the time to really look at what true long-term care insurance does. And in many cases, I used the amount before of a $240,000 death benefit. That's very common. We don't see $2 million asset care policies because it's really focused on the monthly income, not the death benefit. There's way more efficient ways to get death benefit than asset-based long-term care. So, but it's built for purpose.
Right.
So, and it also is with a company who, when you need it, has resources.
Yeah.
So when you have a claim, money helps, but it doesn't do work.
Right.
Right. Who's going to help you navigate care? Who's going to help you find this? Who's going to help you understand what homes are in your area? Who's going to help you deal with the emotional aspects of what this is going to mean for the family? So it's not all about money.
Yeah.
Right. It's all about money.
Yep. And here's just a quick commercial. If you want to learn more about the long-term asset-based care, we'll have a link down below. Our team would love to speak with you and help see if this is something that it would be a win for you and your family. So
awesome.
check out the link below.
Love it.
As we wrap up, I mean, you guys are the title sponsor at Tom Wall's event. That's where we're speaking now. Maybe some people will hear some background stuff. We're literally at Tom's event, and you're going to be speaking this afternoon. What's going to be the theme of your talk?
Yeah, the theme of my talk is the power of what you do. For people like yourself, Caleb, and taking the things that we just talked about that we believe in, really to more people in the marketplace. The thing that is most important to me is that more people hear about our products and what they can do as part of a holistic financial plan.
Yeah.
And so really it's to connect, build relationships with people here, help them understand, share my story, to the extent that helps them be better at what they do and reach more people, and just always to stay connected with the industry and what's really happening. So I hope sharing my story, some of our points of view from One America, helps them understand how to be better and how to continue to reach more people. That's the key to our business.
It's 2026 at the time of this recording. One thing is insurance doesn't change that dramatically, but anything exciting or anything you're looking forward to, anything you want to leak on this podcast?
Yeah,
anything you want to share?
So
breaking
it is,
news.
I think it's January 20th. I think we're launching a pricing enhancement on February 1st.
Okay.
So it's good timing. It's coming out. A little bit better performance for everybody across our entire whole life portfolio. It's a one-way street. It's just better. There's nothing else to talk about, right? And so just an example of how we're focusing on not just investing in technology and service, which we're doing a lot of, make sure our products perform. And I think what I'm excited about is just continuing to go on the journey. I think we've seen tremendous progress in the past 5 or 10 years around better underwriting systems and tools, better interaction and electronic tools or digital tools for you and your firms to do business with not just us, but with everybody. And that is really the key. We're making progress now that we've only talked about before. And I did an interview a couple months ago and says, what do you see coming? And I just say the same, but faster.
Yeah.
Right. Because we just can't get there fast enough. We all have visions and pictures in our head of what this can be and how much difference it can make.
Yeah.
And we just have to make sure we keep making the progress.
I love it.
To help people.
I know as an insurance company, you guys have not endorsed any selling program, but what's your take and thoughts on infinite banking?
I think lots of descriptions of infinite banking. I think we sell whole life products that have benefits and features that are useful to the policyholder. And regardless of the sales concept that you call or use, what's important is the client understands the purpose they bought it for, can maintain the plan, and then it works for them. And there's a clear understanding of that it's life insurance. Here's how it works. And it's working for you in your long-term and how you're using it. So obviously I feel like, I have my own life insurance policies that I use. If you build up cash over time, you get more flexibility, right? So just like everything else, just be careful how much leverage you create in any financial plan, right?
Don't make it safe. Don't make your safest assets unsafe.
Right. Yeah.
But you totally acknowledge that when you build up cash value, that cash value can be utilized throughout your life.
It's contractual, right? Yeah. And it's always been something that has been available for use. And I think people are finding more utility in it today. And I think it's important that we continue to just work together on that. So I embrace it. It's part of the business that we have now. And just like everything else, it's what people understand and know than anything else.
What do you think the biggest misconception is in the life insurance space, especially the whole life insurance space?
Wow, that's a good question. One thing I would say is just this notion of it's not your dad's whole life. And that seems so cliche because I've been doing this 35 years and we've been making it more flexible and more flexible and more flexible. But, I also go to a number of meetings, Caleb, where there are independent advisors who sell mostly IUL because we're there to talk about our long-term care business. But their natural tendency is, well, it's not flexible. All the things they've been selling against it for so long, they don't even really know all the details. And flexibility isn't always a good thing because if you give people options, sometimes they exercise them and they shouldn't. Yeah. So discipline is the key to success in almost everything that we do, including saving. And for me, that's what whole life provides. It provides discipline with flexibility. And people want to just say the discipline is inflexible. Well, no, it's actually just required for success. So I just think, that's the misconception because it continues to be pervasive after 35 years. Yeah. Not because it's true, but because people don't, they want to sell something else instead of. And if you look back over the course of, history, the one product that hasn't changed forever is whole life. All this flexibility with upside potential we created in 1980, these things have come and gone. We've given flexibility, we've chased rate, we've chased lower premiums, and we're coming back to center again because principles always endure. Fundamentals are really going to be what's there when you think of, standing the test of time. And whole life is the one that's proven to be such forever. So maybe that's what people need to know about whole life.
I love it. Anything else you want to say before we end the show?
Not at all. I just want to say thank you. Grateful for the opportunity to share with you and your listeners and to just connect. Appreciate it.
Grateful for One America. Grateful for you guys being one of the solid mutual carriers that care for your people. I know that's that you think every mutual carrier would care for their people. That's not necessarily the case.
Yeah.
You guys genuinely love the people that you serve, and very, very excited to be in your world.
Awesome.
And thank you so much for representing One America.
Awesome. Caleb, thank you.
If you're an advisor, life insurance agent, or someone who just loves the life insurance space, we have a must-attend event for you. It's our 5th annual Life Insurance Summit, June 15th through the 17th, right here in Nashville, Tennessee. Not only are we going to have the biggest names in the life insurance space, but this is also an incredible opportunity for you to meet and connect with like-minded individuals and be a part of our ever-growing community. Learn more and get your tickets before they sell out in the link in the description or pinned comment. Can't wait to see you there.